Property and Casualty Exam Prep Audio. Question 1. Which symbol in a commercial auto policy designates any auto? Option A, symbol 1. Option B, symbol 2. Option C, symbol 7. Option D, symbol 9. The correct answer is option A, symbol 1. Symbol 1, any auto, is the broadest coverage designation and provides liability coverage for all autos the insured owns, hires, borrows, or uses. Question 2. Which of the following would not be covered under the collapse additional coverage in a homeowner's policy? Option A, sudden collapse of a wall due to hidden decay. Option B, collapse caused by the weight of ice and snow. Option C, settling, cracking, shrinking, or expansion of the foundation. Option D, sudden collapse of a roof due to hidden insect damage. The correct answer is option C, settling, cracking, shrinking, or expansion of the foundation. The collapse coverage is for a sudden and entire collapse. Settling, cracking, bulging, or expansion are specifically excluded as they are considered gradual maintenance issues. Question 3. All of the following are duties of the insurance commissioner, or director/superintendent, except Option F, enforcing insurance laws. Option B, licensing producers. Option C, setting the exact premium rates for all lines of insurance. Option D, conducting investigations of unfair practices. The correct answer is option C, setting the exact premium rates for all lines of insurance. The commissioner oversees the industry, but generally does not set rates, except in some states for specific lines like workers' comp. The role is to review and approve or disapprove rates filed by insurers to ensure they are not excessive, inadequate, or discriminatory. Question 4. Part D of a personal auto policy, coverage for damage to your auto, includes Option A, bodily injury liability and property damage liability. Option B, collision and other than collision, comprehensive. Option C, uninsured motorist and medical payments. Option D, duties after an accident and loss. The correct answer is option B, collision and other than collision, comprehensive. Part D covers physical damage to the insured's own vehicle. Collision covers upset or impact with another object. Comprehensive covers almost everything else. Question 5. The oldest known type of insurance is Option F, life insurance. Option B, ocean marine insurance. Option C, auto insurance. Option D, fire insurance. The correct answer is option B, ocean marine insurance. Ocean marine insurance, which began with ancient maritime loans like bottomry, is recognized as one of the earliest forms of insurance. Question 6. A homeowner's policy's coverage is best described as Option A, dwelling coverage. Option B, personal property coverage. Option C, loss of use coverage. Option D, personal liability coverage. The correct answer is option D, personal liability coverage. In standard HO policies, coverage E provides personal liability insurance for bodily injury and property damage the insured is legally obligated to pay. Question 7. A representation in an insurance application is a statement that is Option A, guaranteed to be absolutely true. Option B, true to the best of the applicant's knowledge. Option C, a legally binding warranty. Option D, always considered a material fact. The correct answer is option B, true to the best of the applicant's knowledge. A representation is a statement believed to be true. A warranty, conversely, is a statement guaranteed to be literally true, and a breach of warranty can void coverage regardless of materiality. Question 8. A host liquor liability claim would arise from an injury caused by a guest who was served alcohol at your home. This is typically covered under which section of a homeowner's policy? Option A, coverage of dwelling. Option B, coverage E, personal liability. Option C, coverage F, medical payments to others. Option D, it is always excluded. The correct answer is option B, coverage E, personal liability. Host liquor liability is covered under the personal liability section, provided the insured is not in the business of selling, serving, or furnishing alcohol. A bar owner, however, would need a separate commercial liquor liability policy. Question 9. What does the law of large numbers allow insurers to do? Option A. Guarantee profits every fiscal year. Option B. Predict future losses more accurately. Option C. Insure against catastrophic events only. Option D. Eliminate the need for underwriting. The correct answer is option B. Predict future losses more accurately. As the number of similar exposure units increases, insurers can more accurately predict the statistical probability of a loss, which helps set adequate premiums. Question 10. The penalty of a surety bond is the option A. Premium paid for the bond. Option B. Maximum amount the surety is liable for. Option C. Punishment for not buying insurance. Option D. Interest rate on the bond. The correct answer is option B. Maximum amount the surety is liable for. The penal sum or penalty of the bond is the limit of the surety's liability, the maximum dollar amount for which the bond is written. Question 11. When a driver takes their eyes off the road to send a text message and causes an accident, the basis for the legal claim is most likely. Option A. Absolute liability. Option B. Vicarious liability. Option C. Negligence. Option D. No-fault liability. The correct answer is option C. Negligence. Negligence is the failure to use the reasonable degree of care that an ordinary person would exercise under similar circumstances. Distracted driving is a classic example. Question 12. The section of an insurance policy that contains the insurer's promise to pay for covered losses is the option A. Declarations page. Option B. Insuring agreement. Option C. Conditions section. Option D. Exclusions section. The correct answer is option B. Insuring agreement. The insuring agreement is the core of the policy, outlining the scope of coverage and what the insurer agrees to do in the event of a loss. Question 13. The insurance mechanism that pools premiums from many policyholders to pay the losses of a few is known as option A. Risk retention. Option B. Risk avoidance. Option C. Risk sharing. Option D. Self-insurance. The correct answer is option C. Risk sharing. Risk sharing, or risk pooling, is the fundamental mechanism of insurance, distributing the financial risk of loss across a large group. Question 14. In a personal auto policy, PAP, a newly acquired additional car will have automatic coverage if the insured. Option A. Immediately adds it to the policy. Option B. Reports it to the DMV within 7 days. Option C. Asks the insurer for coverage within a specific time frame, for example, 14 days. Option D. Never drives the car. The correct answer is option C. Asks the insurer for coverage within a specific time frame, for example, 14 days. The PAP provides automatic coverage for a newly acquired auto for a limited period, often 14 days, provided the insured notifies the insurer and pays the premium for it. Question 15. The 4 elements required to prove negligence are option A. Duty, breach of duty, causation, and damages. Option B. Intent, motive, opportunity, and harm. Option C. Peril, hazard, loss, and exclusion. Option D. Offer, acceptance, consideration, and competence. The correct answer is option A. Duty, breach of duty, causation, and damages. For a negligence claim to be successful, the plaintiff must prove the defendant had a legal duty of care, breached that duty, directly caused the injury, and resulted in actual damages. Question 16. A policy that pays a predetermined, agreed-upon amount at the time of loss, regardless of actual value at the time, is A. Option A. Replacement cost policy. Option B. Actual cash value policy. Option C. Valued policy. Option D. Open peril policy. The correct answer is option C. Valued policy. Valued policies establish the value of the insured item, like fine art or a classic car, at policy inception, and that full amount is paid in the event of a total loss, bypassing ACV or replacement cost calculations. Question 17. An insured has a $100,000 home with an HO3 policy and a $1,000 deductible. A $700 windstorm loss occurs. How much will the insurer pay? Option A, $1,700. Option B, $700. Option C, $0. Option D, $600. The correct answer is option C, $0. The deductible is the amount the insured must pay out of pocket before coverage applies. Since the loss, $700, is less than the deductible, $1,000, the insurer pays nothing. Question 18. A producer must complete continuing education, CE, hours. What is a common requirement for these hours? Option A. They can all be in sales training. Option B. A certain number must be in ethics or state law. Option C. They are optional for license renewal. Option D. Passing an exam exempts a producer from CE forever. The correct answer is option B. A certain number must be in ethics or state law. Most states mandate that a portion of the total required CE hours, for example, 3 hours out of 24, be dedicated to topics like ethics, professional conduct, or legislative updates. Question 19. A producer makes a false, maliciously critical statement about another insurer's financial condition with intent to harm them. This is an active. Option A, twisting. Option B, misrepresentation. Option C, defamation. Option D, coercion. The correct answer is option C, defamation. Defamation includes oral, slander, or written, libel, statements that are false and intended to harm the reputation or financial condition of an insurer or producer. Question 20. Which auto coverage would pay for a damaged windshield from a rock kicked up by a truck? Option A, collision coverage. Option B, other than collision, comprehensive coverage. Option C, liability coverage. Option D, medical payments coverage. The correct answer is option B, other than collision, comprehensive coverage. Other than collision, also known as comprehensive, covers glass breakage and losses caused by flying objects, falling objects, fire, theft, and contact with animals. Question 21. The person who evaluates the extent of a loss and negotiates a settlement is A. N. Option A, underwriter. Option B, producer. Option C, actuary. Option D, adjuster. The correct answer is option D, adjuster. An adjuster investigates, verifies, and determines the amount of an insurer's liability. They can be staff employees, independent contractors, or public adjusters representing the insured. Question 22. Under a controlled business statute, a producer's license can be denied if their primary business will be: Option A, selling insurance to large corporations. Option B, insuring their own family and businesses. Option C, selling personal lines only. Option D, specializing in life insurance. The correct answer is option B, insuring their own family and businesses. Controlled business statutes prevent agents from obtaining a license just to insure themselves, their family, or their own business, ensuring a legitimate effort to serve the public. Question 23. The maximum amount an insurer will pay for a covered loss under a policy is the: Option A, deductible. Option B, premium. Option C, limit of liability. Option D, coinsurance amount. The correct answer is option C, limit of liability. The limit of liability, policy limit, defines the cap on the insurer's financial obligation for a specific coverage. Question 24. An insurer's right to step into the shoes of the insured and pursue a negligent third party for damages is: Option A, indemnity. Option B, coinsurance. Option C, subrogation. Option D, arbitration. The correct answer is option C, subrogation. Subrogation allows the insurer to recover the amount of a paid claim from a legally responsible third party, preventing the insured from collecting twice and helping to keep premiums down. Question 25. Where would a policyholder find specific information like their name, address, policy limits, and premium amount? Option A, definitions. Option B, insuring agreement. Option C, declarations page. Option D, endorsements. The correct answer is option C, declarations page. The declarations page personalizes the policy to the individual insured, summarizing key information unique to their coverage.